Hello traders, Gary Wagner here, just about 10:30 in Honolulu, 3:30 in New York. Equities still have about a half hour of trading. COMEX gold has closed. Of course, spot gold is still trading on the day. To gold, very quiet day after a couple of up days, trading at 1077.90. The high 81.50 and the low 71.90, so only about a $10 range. We are closing about $1 from the high today, but the real story has to be that crude oil continues to plunge. Let's go ahead and take a look at it. Now, crude oil is down below 36 at 35.84. It's off 2.5% on the day, off 92 cents per barrel. When we take a look at a short-term chart, this is a 60-minute chart, you can see this slow decline from about 36.80 down to the current price of about 35.80. And the real question is, will oil continue to plunge? And if so, how will it affect our other markets? And of course, the other market that we really need to focus on when we look at current price of gold is going to be the dollar. Now, the dollar is stronger today, 99.39, trading up about a 0.5% on the day. So when we look at the net change of gold, what we really get is on a marketplace that's up $4. That's where we currently are. What we're really seeing is the fact that we've got a $6 negative that we've got to add for climbing dollar, and then $10 of pure buying in the market, and that's what's giving us our net $4 change on the day. So traders, where do we stand with the current price of gold? It's quite obvious. We've not taken any kind of an active trade in the market, even with the market coming off of these lows at about 1060. We're looking at a daily chart. I'm going to go ahead and blow that up a little bit. We've got one basic fib retracement, which goes from 1191 down to these most recent lows here at about 1045. So you've got a pretty wide swing when you look at that. And we've talked about the fact that we really have pegged real resistance in the market at approximately 1080, and that's based on a couple of factors, but one of the primary factors that we're basing it upon is this fib retracement 23% retracement level, which comes in around 1080. We've looked at 1080 as a pretty critical area in the marketplace itself, and we've not been able to breach that. And as I said, I would consider being a long player in this market, but only if and when we're able to take this particular price point out. Because when we look at this particular area, and let me go ahead and put our line back in, but when we look at this particular area, we can see that since this market fell from grace at about 1191 and came down and tested these lows here, there's been multiple occasions when we have traded slightly above it. I'll call it 1090. That's been the absolute top of the market. Let's go ahead and put a line in. Although it's not Fibonacci match, you can see here it made a stab at it. Also here it made a stab at it, and this all being middle of December, end of November time. The last most recent high came in December 21st. That came in at just at around 1080 and fell back down. And then, of course, on this daily chart, we have 83, which was our high yesterday, and our high today roughly just above 1080. So we've not been able to really take this particular price point out. And my sense is that unless we can take this price point out, this being a pretty severe area right here, my sense is that without taking this price point out, we have no choice but to remain flat in the market. This might be the place to go in and short the market, but my sense is that until we have some sort of an effective either close above this or hitting this point and bouncing off, we really can't determine that yet. As I said, my sense is that I don't see fundamental reasons besides the heated tension in the Middle East. I don't see any real fundamental reasons at this point that I believe we will see an extended rally in gold. I obviously could be wrong about that, but we certainly have not been able to have this market clip above this consolidation area that we have seen in the market, in which we've traded on the low side, as I said, at around 1040, high side at around, call it 1085. So we've had this defined range, and then within this range, we have not been able to break above that. If anything, what we have seen is lows being tested on 2 occasions here, and then highs being tested. This was, of course, back in November and December, but since then we have actually gotten lower highs in the marketplace on this occasion here, which came in December 21st, and then this occasion, which just came in yesterday when we had the market trading to 83. So without an effective close above 1080, I cannot recommend that we actually go in and implement any kind of a buy signal in the market, and we have to still be having a bias to the sell side. So we absolutely want to keep our eye on the current price of gold, and as I said, the key point to me is whether or not we can see an effective close in gold above 1080. This has been Gary Wagner, wishing you as always good trading. We'll talk to you tomorrow for another daily update and review. Bye-bye.